All right, guys, we got some data coming out. GDP, initial jobless claims, of course. Got a little trade plan here as we are sitting in a gap up with a couple very large algos here on the QQQ, real tiny one over here on the SPY. So yesterday's highs are these orange dash lines, auto-calculated in for us on TOS here. And we'll be looking at a short target of very far away after GDP and jobs data. So we are looking at a lot of algo gaps below us that are multi-paired up. So if we go to the 1 minute chart here on ES, we have short targets at 6-1, 6-2 and a quarter, 6-1, 50, 51, 6-1, 45, 50. Now, not every gap has to fill, but when there is a multiple faceted amount of gaps down here, there's a very good chance for it to fill very clean. So a lot of gaps cluster together on the 1 minute chart, giving us algorithm dispositions they need to fill. So if we do even get a pop scam higher, that's no big deal. At the open, they'll be walking this down. Anything clean under yesterday's highs has a chance to come down to 22,480. And you know me with the golden pockets of the day. If we look at yesterday's high-low, we generally watch for golden pocket moves. And this was yesterday's high-low. Of course, we opened up right into the golden pocket here. So it held support because remember, futures open at 5 p.m. So if we have yesterday's lows here, yesterday's highs here, that gives us this golden pocket here. So this range that was opened 5 p.m. yesterday on NQ opened up dead into amazing support. And in that amazing support in the golden pocket, we started creating these gaps. 1 minute gap here, 2 here. So we can return, even though they're already tagged, and we'll tell you why, to the golden pocket here after data. So if we break back down into yesterday's highs, or even if we push up, scam up to 20,006 or whatever, it's just going to cause a trap to come all the way back down for the algo. So we're going to play it after the data. No big deal per the usual. Now, we work with first tag metrics a lot of the times, and we look for those first tag metrics all over the place. So the golden pocket is one we always use, right? And that's yesterday's high-low as we discussed. Now, the futures are open and trading, but the QQQ is not. So the golden pocket of NQ compared to QQQ is completely different. So just because we had a first tag metric already on the Q or on the NQs, golden pocket, which again, we already tagged because it opens at 5 p.m. This is not. This is pre-market. Doesn't mean anything. So the two instances you have here just for the QQQ, not only do you have a beautiful looking algo right here where it sets the golden pocket down near 542, but the QQQ, again, if under yesterday's highs, and this algo, which again, under 544, should come back down to the golden pocket potentials, right? And that's what we're looking for because the NQ has left open multiple gaps to the downside, right? And even if you look at yesterday's action, we had a very similar thesis, right? I shorted the entire open, called the big short right at the open here because we had this gap from the prior day, 223.96.99, that we had a big potential to fill. So we knew once it broke structure up here, lower high, it trended all the way to algo, filling it pretty much to the penny there. So we can delete that one since it is open. Or was open, is closed. So now, because we have these clusters here, and we are going to get a bunch of GDP data, and so on and so forth, we're going to start moving into some of those shorts, right, up at the top. So I have one just in place right now, moving in on the triple accounts over at top one. And right now we had just got a payout, so we got to be careful with these. They're a little bit lower. We just got another 10,500 draw out of top one. So shout out to them. And now when we get into some of the anchors down here as well, we're using open, high, low, close 4. And you can see kind of that wide range too on some of these lows from yesterday. And then coming into the new day where we can have an opportunity to see a lot of the higher lows where we put these anchors be chased down for trend. So if you zoom in a little bit and you can kind of see where those 1 minute gaps are here as well. And each one of these 1 minute gaps have those opportunities to fill. So what I like to do is put these on these little higher lows on the way up, and they'll get real staticky at the top there. They'll kind of mince together, mix together, so on and so forth. But they will all act as like a big spaghetti range of support resistance, right? So what I want to see is just this giant move up, 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 up. It's going to fail, right? Because we already have that massive divergence we're looking at right now with the MACD and RSI. So if you look on the 5-minute chart here, we'll go back here one more time before data since we got a couple minutes. We'll put ES and the NQ. And again, you don't really want to be in heavy before data because they could easily scam this up in order to drop it even more, which would be awesome because we could actually get a large position size, knock out another 6-digiter. So that would be pretty awesome. If we do get a massive, massive move down, not if, I should say when, we need that to stay under psychological levels as well. So if we're really close to that 22,600 on the NQ, and then $1.25, 61.75 on ES, every 25 or so on ES, half whole dollars, and then 25 50s and hundreds, in accordance with the NQ, same thing. That's looking pretty good. But if you're looking at that RSI and MACD, notice the price action divergence, right? You're just getting forced up, scam, 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 scam. That's fine. That's no big deal. That's what's expected. We know data is coming out. We know GDP and jobs are coming out. We have a very large expectations here coming out for that core, which I think GDP at the PCE prices too. That's going to be the biggest determining factor here. Obviously, a little bit of jobs. I don't think corporate profits are going to be anything crazy, but if that unemployment keeps rising up and we get a little bit of a hit there, hot, great. We can start to see this thing drop back down. So right now, from a technical standpoint, you obviously, again, you're just seeing that higher low and higher high systems. You're seeing the RSI absolutely go divergent. MACD is dying off. And then, of course, you've seen the volatility index here do the exact same thing, but manipulated, right? The volatility index had nothing but opportunities for higher lows and higher highs on the RSI, suspecting up. MACD from overnight all the way up to the 0 line, looking to pop back up and continue higher, right? So here's that data. So we're going to get that short. Hopefully started here with some speed. If not, it doesn't matter. We'll just add to and watch accordingly. So and again, we do have these position sizes on very lightly now because we have gap targets that are so far away, they're like 100 points away. So we don't really need a whole lot on here on deck to make a whole lot. So, but yeah, for right now, unfortunately, it's not really giving us any kind of super panicky move, which we had hoped for. But a big old nothing burger, it looks like. Yeah, that's okay. We're still going to keep the shorts on. We're still going to keep our targets the way they are because of the multiple cluster gaps below us, right, on that 1-minute chart. So we will keep these on. I'll probably add into these just a little bit. Get a little better average here on some of these and keep these cooking to the downside here. If we can see an opportunity where, lost my other screen. There we go. Where the speed finally does come in after a few minutes and we start closing under yesterday's highs, as we discussed earlier. We'll probably add to this just a little bit, but right now we got all 3 accounts linked. We don't want a huge position on, right? Because again, we know we can see the divergence from a mile away. We have gap magnet targets below. So even if they did run this up a little bit, I still would have just added into the short, red or not. But now we do have our first target coming up right here, a 1-minute gap on ES. That'll most likely be a bounce point, and it's going to take some time to kind of work through, because if you look at the moving averages here, you got that 100 EMA support, and then it just glued itself to the 10 SMA. We call that algo buying. It just, price action just sticks to the 10 SMA, doesn't do absolutely anything until an outsourced catalyst like news comes along, right? So there's a long way down here. I'll try to get back onto a record. I'm not going to record the whole rest of it, make you guys watch a whole hour long of whatever. Move it in. But price action's first leg down, we should be coming into all those spaghetti view apps we're talking about. Maybe pop back up closer to here, and then we'll see you guys continuing all the way down towards some of those 1-minute gaps. So those are going to be a target of 22,480 for the NQs. So if you do a little bit of the math here, 22,480, and again, these are the funded accounts. You don't want to make too much money, so we're probably going to be getting out early since we have consistency rules and all the other stuff on these. The cash accounts are still in all on ES. We picked the perfect top up here on the cash account, 61.69, and we're just going to hold these until the opening potential washes and so on and so forth. So we'll see you guys down near that 22,480. Those are the bigger gaps for the NQ, and we're going to be watching the opportunity to move through all of those. I don't think we're going to stick around for 3,000. If we get another leg down kind of into here and most likely around 1800, 2K. I try to go for anything between 1700 to 2K a day across all these accounts. I don't want to make more than that 8 grand a day on these because consistency, right? So we might, where the VIX is very low, we're not going to get that crazy volatility, the big candles. So you do want to keep in mind to um, not overzealously make a ton of money on these because then you got to just keep up with your consistency, and you have to trade for 10 days on these. So again, just hitting that 10-day mark or consistency early in this floating a few contracts, that's the smartest way to do it. So we'll see you guys on the next record here. I'll see you guys down at 22,480, and we'll see how everything went. All right, guys, finishing up the pre-market breakdown into the trade we have. So as suggested, we're moving on down with our NQs, right? So we had 2 different entries, 2 different exits here. We're just moving down from the 1-minute fib range, coming down from the spaghettis, right? So what we like to do on that 1-minute chart, of course, grab a lot of those consistent higher lows, and we put those anchors on, right? Open, high, low, close, 4. And then when we suspected that data was going to trap head down, chase the magnets, we want to see that price action slam into those spaghettis, pop, give you the best case short entry, structure break, continuing to the downside. Now, as we move into the next big phase, we're going to tell you the entire breakdown and what's going on for the day. So again, similar to yesterday, we opened up, well, didn't open up, we opened up pretty close to wick range of the daily, and what we've seen is just another pre-market run up very similar to the prior day. So when price action above the orange dashed line right here, which is yesterday's highs, is accumulating up here, we don't really have any reason to be in a gap and go because there's no real data to push us up. When we already had really large moves coming down like on SPY from the 590 weekly, pushing up for days and days and days, a catalyst is not going to appear at the top of this huge move, something like CPI, Powell, FOMC. Something like that really needs to be a heavy hitter in data to keep pushing us up, especially into all-time high gaps. Now, I don't care if it trends all-time highs where price action starts in a gap up, comes down and does a common gap fill to yesterday's highs, and then progresses. That's perfectly fine. But a gap up and go without returning to yesterday's highs, very minimal, right? So why did we pick all the short side and predict it through data? Well, if you missed any of the chats, we had a multi-gap system down here coming for another slow grind down after the structure break that we had seen here. So what we identified was on the 1-minute chart from the 5 p.m. open right here, we had gaps 22,444, 22,477, 22,481 on that NQ, and of course paired up very nicely multi-gaps on the ES 1 minute as well as these algorithms are suggested. So comes down 61.50, 51, 61.45, 61.57 is the bottom of that fib. I think there was one more. There it is, 61, 62, 27. So what we do is we're going to take that data candle, right? Point those Fibonacci's to the downside. We're going to run those extensions and see what they line up with. So we always like to say ES is a better market to watch. So if you're taking, this is the 5 minute, so fib range, 5-minute chart, pointed to the downside. Notice where the unfilled 1 minute gap is, directly on the 1618. So we know from the golden pocket rule, anything under, we have a fantastic chance opening into this weakness for the S&P to come down and drag ES here. So we've been short up here at the golden pocket, and the main accounts on ES here, looking for 15 points total from the top of this GP failure down to the first gap. Now, nothing goes in a straight line, so I don't want you guys shorting lows, chasing little gap fills or anything like that. We are structuring a short up here, and we can't stop out until we're above yesterday's highs, and for whatever reason would get pushed up by a Trump tweet, something oblonged, something gnarly. Again, very low percentile chance. Now, as the full structure for the remainder of the day would go, we're going to be looking for those low breaks, lower highs. We're going to be looking for those gap chases down to 61.51, down to 61.45.51. Now, of course, we do have some lower gaps, and not all gaps have to fill. When there's multiple gaps like this on a 1 minute chart, you will look for the first and or second to fill easiest. So our short easy mode is down here, 15 points on ES. We should be rocking it pretty well right now. NQ has a cluster, and a GP tag needed as well. So again, NQ is going to be very similar, pretty much the same, but with a wider range, right? So we're going to be watching this wide range for NQ here all the way down to the double gap, and that's going to be my favorite ending of the short. So we are going to call anything under this 5-minute GP, staying under 22,557, down about 80 points. The next gap is about 113 points away. Now notice these gaps are obviously built right in yesterday's high-low GP, which means when you take a Fibonacci like we always do and turn it gold, the 100 to the 0 gives you a Fibonacci golden pocket center. So this is a retracement value. So anything under yesterday's highs retraces to the golden pocket with a high percentile chance. So again, you see that short sentiment right here. Anything under the golden pocket is dead on yesterday's highs in the orange dash line. So as long as we get structure to keep on snapping, keep on lower high, lower lowing, trend will knock us down to that golden pocket again. But we already have a first tag, obviously, like we said, discussed earlier on NQ. So we need a first tag on QQQ, which means anything under 544, as we posted on X as well, nets us a chance at first tag metrics. Now, first tag from pre-market to live, algorithms need live tags over here, not pre-market tags. So when we created this one right here, we need a live tag of the green golden pocket because we have an algo here in pre-market, and then the daily high-low right here on QQQ. This has not been hit. This is yesterday's action. Clearly, we are in pre-market, not live. So we will come down under yesterday's highs for a potential shot at this GP, and our final short target from anything under either the 1618 here. I'm going to do 544 for the pre-high just in case NQ does an NQ thing, but we're looking at about 100 and some points as we already discussed on the NQ. It just transfers 40 to 1 on the QQQ. So 40 points on that NQ is going to lead you to a $1 here on the QQQ. So just do the math in between. So that is the entirety of the trade plan. That's why we called it the way we called it. And last but not least, we do have the VIX here coming into another 100 EMA debacle, right? So remember yesterday we said it has to hold up here, 2021, and then the GP to pop, which it did. So 1693 was our support, came back up, hit that 200, and then continued that downside and forced, which is fine. Didn't cause too much of a reaction. Now today we have another base. We're into the mid 16s, half whole dollar, right? Pretty close to 1650, about 9 cents away. If we start to hold that yesterday's lows, pop into the 100 EMA and start heading back up a little bit, well, we don't even have a lot of great targets except for only a few GP no tags here. You can see with our indicator, a couple Fibonacci 50 pockets on these. Those aren't even that great of targets. So what we're looking at for potentials here, I only have one candle that's an algo that looks interesting enough to utilize, and that's this guy right here. So this 5-minute candle high-low hit both the 200 SMA and the 100 EMA and the 10 pretty much. And then we're going to put that Fibonacci to the downside. We're going to turn it neon green because it is intraday, like so, and then we're going to see where that support comes in because Fibonacci is god of all things. 423.60. Look at that. Fantastic support on the VIX. So what happens after we create a Fibonacci candle and it cycles to the downside? 1618, 2618, 3618, 423. We hope in terms that the 423 will hold and we will get a retrace back up to the next couple legs. So if we hold yesterday's lows, which is the blue dash line, and that opening price here on the VIX, and the VIX does get a little bit of love here above 1662, which again, we've already hit the 423 extension. We would like to walk these extensions back up. So 423.60 to the 3618, up to the 2618, and that would be the potential move for VIX. So anything above yesterday's lows, I'd like to see VIX as high as just sub 17, so like 1690s there. So when this trade comes to fruition, we might need open. The VIX probably needs to shut down and redo the algos, right? So VIX shuts down for a few minutes, 5 minutes at 8:15 Central, opens back up at open, 15 minutes of downtime, and then the algos can reset here. So we do have this one Fibonacci to deal with today. That's it, 1662. Yesterday's lows must hold. Doesn't matter if it scams a few lows, and then we can continue back up. Now the VIX, because it is so low, we're not going to use that as a perfect grid where we're just watching that as a roadmap, and that's the only thing that matters. Remember, structure and Fibonacci targets on the QQQ and SPY will be more important. So for the ending trade here that we have on our triple account here coming down as we're looking for it, we still have all of those targets all the way down here to 22,041. So we are calling that 100-point runner to the downside. This is 88 of it. And then potentially back to the 50 right here is about 100. So we have 100 points on an NQ, about 15, 16 on ES. And this will be the final target under the golden pocket as we discussed. All right, guys, just a little follow-up on the third part of our videos here. As predicted, we did get that opening range dump out under yesterday's highs and under 544 on the QQQ with the target of the double gap system right there. Hold on, this piece of crap MacBook never opens anything I tell it to. There we go. So the 22,480, that was the 1 minute gap that we were targeting. And of course, like we said, under yesterday's highs, back down to the golden pocket for the short. And then we had obviously bias swap to the upside here because, well, it's just a further scam for the rubber band, right? As we discussed in the last couple videos as well, Qs is FOMO all-time high moving, squeezing. So there's no scenario in the world where if this doesn't keep going, the SPY will get drug up and do the exact same thing. So in our prior prediction video, we also gave you the best case scenarios on 608 on the SPY. So I wanted under 608 to come back down, back test, give us an absolute normal trade day without scammer manipulation. Obviously, that's not in the cards with the baby hand Trump market because little hand Trump never, ever gets off the tweet deck and gets off the movement of the hand. So it's okay. We're always used to it. So we obviously have swap targets here. So as I discussed in the last video, if you are under 608, good to go to the downside to actually do a back test confirmation and a controlled move where something would actually have common sense to it. If not, we're just going to go along over the 608, and I gave out target 1 and target 2 for the crew, anything above yesterday's highs, right? So here's yesterday's highs in the orange dashed line up to the T1. We're about halfway through this move, so it wasn't a guaranteed up 18 points on that one, but we did call the dip buy and the loop. So the last little piece of decent video right here, I'll go into the loop here. In a loop, again, we cover this on the indicators we use. All of my live videos have exactly how I use these, but the 5 minute broke back up here, snapping up to the T1 long, and I got off right here about 10 a.m. and I said, guys, just wait for it to dip under the 10 SMA, creating a loop, and then long it all the way to the T2, and you'll be perfectly fine. So I told everybody to enter here at the loop and then run it to T2, which is another 15 points on the ES. So that was the ending prediction on the flip. And of course, this just follows up the last two videos I put out. Over under 608 on SPY. Is it over? Yep. Guaranteed long. Is it under? Back to the guaranteed gap fill. And all we had to do is play that. So if you want to see me do this stuff live, as you just seen in the first two sections of this video, come hang out in chat. First link in the description. Take care.